Hello, everyone. It's hard to believe that we're in our fifth week of our COVID-19 Power Lunch series, our twice-weekly video series where we bring you new legislative updates and any other topics related to the coronavirus pandemic. As a quick reminder, if you have something specific you would like us to cover, please don't hesitate to email us at info@jmco.com. On the menu today is the COVID impacts on our audit and other uses for your financials. Joining us with the discussion is Katie Davis, partner with James Moore and the leader of our firm's accounting and audit practice, and the higher education industry team. As a reminder, I'm Erin Spivak, moderator of the series. And so today we're going to switch off with talking about Katie, what are the biggest impacts of COVID-19 from a financial reporting standpoint?
Hey, Erin, I'm glad to be here today. And, COVID-19 does have a large impact on your financial reporting, and it's something that we are hearing a lot of different stories from our clients based on their unique circumstances. Of those unique circumstances, I would say the biggest issues where we see a discrepancy is related to the industry that the organization is in, because a higher education institution or a nonprofit is going to look very different from a manufacturer or a construction company. And I want to make sure we're covering all of those topics today, but recognizing that it's not one size fits all for what you're all going to see. And it really has to do with what industry are you in and what are you seeing in your own organization and how the pandemic is impacting your business. How it's impacting your people, your customers, your vendors, and also what your cash flow and liquidity looks like and what resources you have available to you through, I know you've heard a lot from our previous series about the PPP, for example, and we'll talk a little bit about what that will look like in your financial statements. But it also has to do with industry standards for timing of when your financial statements are reported. Many of you that are tuning in are corporate entities with a calendar year reporting, and some things like PPP aren't going to have a huge impact on your financials because the money will have come in, it will have been spent, it will hopefully have been forgiven, and by the time you get to December 31st, it all will be said and done. However, there's other industries that have fiscal year ends, and we'll talk more about what that looks like if your cutoff for financial reporting falls in the middle of all of that. But really, also with your industries, you have different users of financial statements. So if you're a nonprofit or a government or a higher education institution, the stakeholders and your governance looks a lot different from board reporting and commissioner reporting and other constituents that you're working with versus a corporation where you have your management team internally, and then you're working with a lot of external stakeholders such as banks, bonding companies, insurance agents, and other users like that. So what matters to those users of your financial statements? So just to dive a little bit deeper into all of that, want to talk first about unique transactions, including PPP and forgiveness. And I'm going to start with those of you that are in the nonprofit world that will likely see an overlap in your financial reporting in the midst of this PPP relief program. So I'm going to read some notes from my phone, but to make sure I get it right. But what you really need to think about is this process. So you have applied for PPP loans and you have received funding from the bank. Then over an 8-week period, you're spending those funds and you're accounting for those expenses. And when that 8 weeks is up, you then have to account for those expenses to your bank to evaluate for forgiveness. And then at that point, the bank makes a determination if all or part of that is forgiven. And then whatever may not be forgiven is then has to be repaid back over a certain time period. So for just a moment, I'm going to talk about debits and credits as it relates to that, because I think it will help those of you, especially that have a June 30th year end, account for that appropriately. So, when you receive the PPP loan, there's been a lot of discussion of what does that look like? What do you put on the books? Is it a note payable and a liability when we feel really confident that there's it's highly probable that you will be forgiven, at least a material portion of that. And our position is that for the time being, put it on the books as a liability, and we can really talk about what you would call that liability based on the facts and circumstances that we see after year end as you start the forgiveness process. There has been some discussion through certain industries that certain entities that support these industries that could say that it could be a deferred grant receivable or deferred grant revenue, meaning it's still a liability, but it's more of treated as a grant as opposed to a note payable. And really, I think what the first question that you need to talk to is who's using your financial statements and what specifically are they looking at. So if your bank is using your financials, they're probably going to want to see what the liability is and the probability of that being forgiven, and how you account for that tells that story. So we always recommend being more conservative and then adding disclosures as you need to better tell your story. So in general, our position will be to put it on, you would debit cash, you would credit a note payable, and you would keep that on the books. Let's say you received your PPP money before June 30th, your 8-week clock started and finished after June 30th. So at the end of that 8 weeks, you would then look at what was forgiven, and you would debit your note payable, and you would credit a revenue for either grant revenue or loan forgiveness income. And for those of you that are in nonprofit accounting, that would be without donor restrictions, an impact to your net assets in that area. And you want to make sure that you are capturing that timing properly. Now, if there's any kind of debt covenants that you're dealing with, and for some reason that note payable throws you out of whack, you want to talk to your banks about that ahead of time. You can always add transparency in your footnotes through a subsequent event note later that explains that you have evaluated the forgiveness process and that it seems highly likely that it will be forgiven. And if it is forgiven, this is what those covenants would look like if you would like to add additional transparency there. But I would first start with talking with your banks and see what it is that they want to see before you go down that road, so that you're communicating what they need to see and not something different. So that's pretty much PPP, and any of you that have a calendar year end, you would follow that same accounting transaction approach, but it's just a matter of, it probably isn't going to matter as much if it all washes out for the most part through forgiveness, how you account for it in the interim, unless you're reporting internal financials for management or board members that want to see, you would follow that same suit. In addition, you're going to have some cash flow management issues, and you want to make sure that as you're looking to, many entities that we've talked to have talked about trying to increase their lines of credit, and wanting to make sure that when you're looking at line of credit asset borrowing bases and your accounts receivable, that many times if your collectability issues on your accounts receivable are greater than 90 days, and sometimes we're even seeing 60 days, that you want to evaluate that, make sure that's collectible, recording an allowance for doubtful accounts if you're unsure of the collectability, because the banks are going to want to see what your cash flow is going to look like and how you're able to fulfill the obligations of any extensions of lines of credit that you may get. So if you have any uncollectible receivables, start getting on the phone with your customers and assessing the collectability of that so that you can have a better handle on what your cash flows are going to look like to meet any needs for extended lines of credit. And that'll any kind of proactive activities like that will help you with cash flow management and that standpoint. And that's for any industry. It's the same, it would be the same for a nonprofit as it would be for a commercial entity. So, we recommend that you try to look for opportunities like that with lines of credit, but understanding where the limitations are in advance will help you better plan and budget for what you need. Yeah. And then also wanting to make sure that your workforce, as you're looking at your workforce, And if you provide a retirement plan for your employees, the Department of Labor and the other governing bodies have some rules about partial plan terminations if there are layoffs of 20% or more of your workforce. What that means, you're allowed to do that, but if there are any company contributions to your plan that are vested over time, those would become 100% vested for all of your participants in the instance of significant layoffs like that. So if you are looking at what, that money is already in your retirement plan, you've contributed it in the past. If they were to be laid off and forfeited some of those funds, they would stay in the plan and could offset future contributions. However, if there's a partial plan termination, you would need to know that you have to provide all of those funds to those employees, and you wouldn't have that extra amount to go against future contributions. So just another thing to be aware of as you're planning for cash flow standpoint. But I talked a lot about the users of your financials, and you have management, you have your banks, your bonding companies, if you're a contractor, if you're a nonprofit, or even in higher education, you have boards, or you might have grantors, and you want to make sure that you are understanding what's important to all of those people as you are looking at the financials, to make sure that the story that the financials is telling is the story that's going to help them have better transparency and clarity into what's going on during these uncertain times.
No, that's really good advice, Katie. And so a couple things I want to go back to is, one, you talked about on the PPP loan forgiveness, which is a really good point for people who are either having a year end of June 30th or May 31st or July 31st and don't have certainty on loan forgiveness, or who just have to submit, whether it's monthly or quarterly financials. If they are I would say on the nonprofit, I guess that's not the right word, nonprofit, non-university, if they're a normal corporation or partnership that's operating in manufacturing, construction, or other business, is there a set way they should be recording that loan forgiveness as income, or should they be offsetting the expenses that they use the loan forgiveness for, or does it kind of depend?
I mean, I think it kind of depends. You're not going to want to record it as operating revenue because it's not money that you're earning from providing a product or a service. So what I would recommend is putting it as other income, meaning grossing it up, because those are still relevant expenses that you would still be incurring for paying payroll, rent, utilities, etc. And I feel like reducing those type payroll and types of expenses, it would understate your expenses. So I would show it as an other income. The general rule, especially for corporate entities and partnership entities, show it as an other income, as grant relief. You could even call it PPP, PPP grant relief. And, report that as an income, still keep your expenses as they are, because they are true expenses of the company. And there's no reason to need to net those against each other.
Yeah, because in effect, they are, even the payroll will be reoccurring expenses, as are rent, utilities, but obviously the grant relief is non-recurring. So that's the reason to not have it as operating income. So that's a really good point. I know we've gotten a couple of questions on that so far, so thank you for clearing it up. That probably kind of leads to our next question, which is how you mentioned who the stakeholders are, whether it's the bonding agents, the banks, the government. It said you need to engage them in conversations, and that seems to be a really important point, is before you go through any sort of financial statement disclosure or submission to them, you need to understand what they're looking for. Can you talk a little bit more about that?
Yeah, and I think, it's always really important to understand when you are preparing a set of financial statements, who's going to be looking at them, and making sure you're telling the full story that you're trying to tell through numbers. And especially if some people aren't financially savvy, they may not really be able to see the relationship in the numbers and what that means for your company's story. So anytime you can, whether you're in a pandemic or not, but certainly now more than ever, it's so important to communicate often to provide that financial transparency to your stakeholders. So conversations you'll want to have first is, what what questions do you have? What information can we provide to help you better understand our story? And generally, you can show that by being more transparent on your balance sheet or your P&L, and showing here's this specific PPP loan forgiveness. A lot of people want to know that specifically. You don't necessarily want to bury that in. And so helping with captions that way, if you have a full set of financials that include footnote disclosures, taking those footnotes as an opportunity to write about what are your risks and uncertainties so that people understand what those are, but then also what it is that you're doing to help address that. And, there are, as we come in as auditors and as assisting our clients with evaluating appropriate footnotes for their financial statements, we have some recommended language that explains the uncertainty around this pandemic, that it's hard to identify what that impact's going to look like, and but that it could be material. We also have some language if you do have the PPP loan to explain, here's the amount we got. We feel like it's reasonably possible that it will be forgiven. But then, as I mentioned before, I think the biggest question for a for-profit entity and potentially some nonprofits is any banks. If you have loans with your banks and they have covenants within those loans that you have to meet, they're going to be looking at certain ratios. So they know to pull debt to equity or working capital or different numbers like that. And if you feel like that number is skewed for abnormal reasons, you could show in your footnotes, here's what it looks like on the face of the financials, but because PPP was listed as a liability but not yet forgiven, this is what we anticipate it's going to look like 2 months from now. And that helps the bank make a better decision as to whether they are willing to waive the debt covenants for the time being, and just make better decisions and better understand what you're going through in the moment. So, really understanding what it is they're looking for, what they consider to be a red flag, so that you can address those proactively. So, it's really important to engage with those kind of conversations, but then it's also important to engage with other stakeholders to help you be strategic right now, because a lot of you are having to really kind of take a step back and look at, is my business model the right thing to be doing? Are there things we could be doing better? Are we having to shift our customer base right now for various reasons? And the more you can engage with those stakeholders to better understand what they need, better understand how they play a part in your organization, it helps you be more strategic in telling your financial story and making tweaks and adjustments to your budgets and your projections, and better understand how you're going to manage your cash flow issues. So developing a strategic financial plan with all of that information just helps you to better manage going forward with a little bit more clarity, so that everyone is marching in the same direction at the same cadence.
No, that's really important. I know that you've mentioned before, and for those who don't know, Katie also has another webinar series that she does for the university segment. And you had mentioned before talking about strategic plans and a financial plan and how daunting that is when everybody right now is very much in reactionary mode. So can you talk to us a little bit about what strategic financial planning really looks like? Because it sounds pretty daunting.
It does, and it doesn't have to be. I mean, it needs to take some time and focus, but it doesn't have to be an elaborate production to go through this process. But it's taking a step back and it's saying, okay, what is our vision? Where do we want to go? And then doing a SWOT analysis, looking at your strengths, your weaknesses, your opportunities, and your threats, and saying, okay, what's helping us get to where we want to be and where we need to be, and what's hindering us, and reflecting on those things for a moment to then say, okay, this is where we need to focus our efforts from a financial standpoint. And I talk a lot about playing defense and playing offense. And right now in crisis mode, you have to spend a lot of time and effort playing defense, and that's completely understandable. And so when you're playing defense, you're making a lot of short-term strategic decisions. So cost containment, evaluating your expenses, evaluating payroll, evaluating your cash flow. Are you going to a bank and getting a line of credit? applying for PPP. All of those things are very short-term financial strategies that are very important for you right now to sustain through this crisis. But it's also an opportunity to think about, where do we want to be when we come out of this, and how can we be better as a result of it? I say a lot, what doesn't kill you makes you stronger. So how can you start thinking about those things now and get empowered and motivated, and potentially even utilize some of your personnel that you have chosen to keep on your workforce but might not have enough of their normal day job to do for various circumstances? How can you engage them into looking further out into long-term strategies for business continuity, changes to your business model, et cetera? Are there new opportunities for different types of revenue that you could be bringing in, or different things you could be bringing to your customers? What are your customers are also struggling, so is there something you can be doing to help them? And it would also help your company at the same time. So having thoughts like that will help you fill the gaps in the short term potentially, but then also help you to be stronger in the long term. And it, taking a few hours, or it might come to you in the middle of the night, but jotting it down, being intentional about moving that forward, and being proactive and strategic in your thinking will go a long way for the long-term success of your organization.
No, definitely. I know that I had Dave Fettman on, who does a lot of strategic planning, and one of the things that we really talked about was the fact that this pandemic, although it seems like a very short window, especially as we kind of get back to reintroducing things back into the normal, like being able to go to restaurants, being able to go to retail stores, although at limited capacities of wearing masks, but this is really going to have a long-term effect on businesses. And so part of that strategic plan really can be, if I have to assume that 3 months from now it's not going to be the same it was a year ago, how do we shift our business model, whether it's from revenue or expenses, or how we're having employees work, or what they're doing? Really, that plays into that long-term financial plan, because I think it might be short-sighted to think in July everything's going to be back to complete normal,
Right. And I mean, I think it's, look at places you're going. Even yesterday, I went to the Chick-fil-A that's in our local mall. That normally you'd have to get out of your car, walk into the mall, or do the app and the curbside service. They've created a drive-through in the mall parking lot to serve customers. And that's not something that just happens. It takes strategic thinking and some effort to execute, but it's helping them keep cash flow coming in to serve their customers, to keep their people employed. And, just thinking about little things like that, and what are little things you could be doing to help move the dial in your own organization.
No, I think that's really important. We've seen a lot of companies shift to things of that nature. Even Chick-fil-A now has their sauce in Publix. I had no idea. Maybe they advanced that because of the whole pandemic. I'm not really sure what their plan was. So, all right, we're going to shift gears now. And we're going to talk about, what does an audit look like? And an audit can also be an audit, a review, and the COVID-19 world. What is changing in organizations on how they're being audited?
Yeah, so, as overseeing that department, a majority of our clients see us face-to-face in their offices. We bring the team, we set up in their conference room or somewhere else where they provide a space, and we're just digging into all of their stuff. And we can't do that right now. But the great thing about being auditors and being able to bounce from company to company is that we can also bounce home just fine. And we're used to working from wherever we're working. And before all of this, I used to joke, because I'm pushing for more remote audit service, because some of our clients don't want us taking up their conference room, and some of our clients are not within our geographic region, and it's more costly for them to pay for us to travel to them. So we've been looking for opportunities to provide really good client service remotely. And in all of that, I used to joke and say, sometimes, in this paperless environment, we're performing a remote audit even from a client's site, because we use a share file secure portal where they upload all of their electronic documents, and we download them, we do our thing. And yes, we do have face-to-face conversations still, and I don't want to discount that, but those types of technologies that our firm has invested in, and a lot of audit firms around the country have invested in, have allowed us to be really nimble as we've had to shift to this new environment. As you said, things aren't going to get back to normal in July, so we anticipate that it's going to be a while before we have our full teams coming back out to client sites. And we know that that leads to a lot of questions from our clients is, what does this mean from a timing standpoint for how we're going to do it? And I can say for our firm, we're still, pretty much sticking to the timing of our scheduled audits when you're used to having that work done. Now, if there are circumstances on your end that require us to accelerate the process or delay it, certainly communicate with your auditors up front about that so that we can modify our schedule accordingly, because we want to fit you into when you're ready to be audited. And we do our thing from our homes, or we'll start to slowly trickle back into our offices, but we'll be auditing you using that same share file portal, using our paperless software, using our video chatting technology. So we use Skype and we use GoToMeeting, and we can have face-to-face video conversations with you. You can share your screen with us and show us things that normally when we stand over your shoulder. So we can still do all of those things virtually. And really, it hasn't been a huge hiccup on either side, unless you're a company that still has a lot of paper. Then it's just a matter of getting that paper scanned in and over to us so that we can see it virtually. A few things that we do look at a little bit differently is we are going to ask you some questions about how your internal controls have changed throughout this process, either from the day-to-day paying bills, receiving cash, depositing it to the bank, doing your bank reconciliations, even your financial closing and reporting process and booking journal entries. All of those questions that you're used to hearing from us, we're going to be asking, okay, well, how did you do it normally? How are you doing it now? Because we have to assess whether those controls have changed significantly and what that means for our audit plan and the risk assessment that we do kind of behind the scenes as we start preparing for your audit. And that helps us know where we need to focus. So if your processes and controls have changed significantly, it's good to let your auditors know up front so that we can plan for that. And we don't want to do too much work by over testing two sets of controls, so we can figure out what's the most effective approach to still give you a thorough quality audit without being so much of a burden and doing more than we have to do. So that information is very helpful for us as we plan, and we'll be asking you a lot of those questions and really determining how significant those internal controls have changed. Some other questions you're going to be hearing from us, and it's not the most fun conversation to have, and it's nothing new from a standard standpoint, but we'll be more closely evaluating going concern. And so what that means is we are looking as auditors as to whether we have any substantial doubt for your ability to continue your business for a certain time period after your financial date. So it differs depending on whether you are reporting under financial accounting standards, which most of you corporations, nonprofits are, or if you're reporting under government accounting standards, so all of our local governments and our higher education organizations report under GASB. So under financial accounting standpoint, we're looking 12 months after we finish the audit. So we're asking questions that say, what does the next year look like for you? So let's get out our crystal ball and let's talk about it. It's a little bit more in depth in the crystal ball, and I can tell you some things you can do to be prepared for that. But I want to say on GASB, the flip side, it's 12 months after the financial statement date. So if you have a June 30th year end, we're looking to the next June 30th. Same with a September 30th year end, we're looking to the next September 30th. So the window is a little bit smaller for government than it is for a for-profit or a nonprofit that's under FASB reporting. So what we'll be asking is whether you have analyzed your ability to continue operating for that 12 months or longer, and what can you show us to sort of prove that you feel comfortable that you're going to keep the doors open. And that's where going back to engaging with your stakeholders, creating a financial strategic plan can really help you in that going concern evaluation, because you can really look and say, yes, we've done this analysis, we've gone through and gotten PPP, we have been forgiven because we followed the rules, and we've also extended this line of credit, and we've applied for these other grants, and and showing, and here we've cut these costs and we've renegotiated this particular item, and we still have these customers on board, etc. If you can show us all of that and tell us your financial story and what your future plans are. So that's where that strategy really comes in handy. And so, as we ask you those questions and you can show us these things, it helps us to better form our opinion and whether our opinion needs to be modified as it relates to whether we think you have the ability to continue, or if we do have substantial doubt for your going concern. So unfortunately, these rules aren't new, but unfortunately times right now elevate that for a lot of our clients, and we're going to have those, ask you those questions. Please don't be offended when we ask you. Professional standards require us to do that. And I think the questions help to open up a really robust dialogue, and maybe you'll learn some things from us as we're having that dialogue that you can take and have with other stakeholders, because as your CPAs and your auditors, we're a stakeholder, but you can kind of have the similar conversations with your banks and grantors and other stakeholders that you have. And then lastly, enhanced disclosures will look a little bit different, and I touched on that already and how you're telling your financial story, but those of you that may have already seen some, those of you that are calendar year ends and we've issued your audits in the last couple of months have seen a subsequent event note about the risks and uncertainties around the COVID-19 pandemic, and that you are currently evaluating what that impact is on your financials, but that it's likely material. So that's the general language that we include. And as we start now serving our clients and performing audits that have fiscal year ends, that will turn into a risks and uncertainties note that says basically the same thing, but it's not after year end, you're actually in the middle of it. And but we'll also allow for disclosure about the PPP loan, or about the fact that you've gotten these other relief funds or work to expand your line of credit, and really showing and telling that story to help prove that here's all the things we're doing to stay financially sound, so that this picture that is a snapshot in time, what we think it's going to look like as we continue. And that, again, engaging your stakeholders, figuring out who's looking at your financials and what matters to them, and using enhanced disclosures to help tell the story that you want them to know, and provide as much transparency as possible.
No, that definitely makes sense. And again, I want to probably ask you, I'm assuming that most stakeholders, whether it's the banks, the bonding agencies, or any of that, they're not going to be shocked by many of the companies with these disclosures or going concern. I mean, it's throughout. It's hit everybody, right? So when people kind of like, when you said don't be offended by this, or they have a big, oh my gosh, what if we have a going concern problem? I mean, I'm not going to say they're going to be forgiving from whoever the stakeholder is, but it certainly isn't going to be the first financial statement that they're going to get with these disclosures, or perhaps even a going concern.
Right. I mean, if anything, I think you want to be as transparent as possible, because everyone's going through this, and it's better to be proactive and transparent than catch someone by surprise in 12 months from now. That, right. Oh, it seemed like everything was going well. What happened? Right. And yes, you can't predict the future exactly, and you can't control it, but the more that you are looking forward and really thinking through these things will help you in the long run.
No, definitely. And having relationships that you can reach out to those people and be transparent with definitely helps on that situation when going through the financial statement audit process or review. So Katie, thank you so much for all your wisdom today. We really appreciate it. I know some people are not even wanting to think about their audits yet, but at the same time, some of these questions are starting going up. So this kind of gives a window into whether you're going to have a reporting period soon, or even at the calendar year, what you're going to be looking at. Because as we said, we don't know when this is going to end. So we really appreciate you being on. Again, if you have questions, please feel free to email us, or info@gnco.com. As a reminder, on our website, we have a COVID-19 resource center that has tons of articles, links, and blogs that we really try and keep up to date with whatever information is out there, as it is ever changing and fluid, that we want to make sure that you have the most up-to-date information. And we look forward to seeing you on our series next week. Thanks, and have a great day.
Bye. Thank you.